Excellent. All right, guys, let's get started. Loans and lenders today is what we're talking about. Where we start. And you guys have heard me speak before on when it comes to lenders and the loan process. My biggest recommendation is that you kick that over to the lender any and every time that you can. You understand the high level stuff that you need to understand. And yet you're not trying to talk to them about what their debt to income ratio needs to be. You're not trying to talk to them about what interest rates currently are, right? I would highly recommend that when it comes to your lenders that you have a roster, right? And I am trying to be a little bit funny because apparently in the dating world, people have rosters, right? No, I'm just kidding. So I would recommend that you have a roster. And the reason I recommend you have a roster is you're going to have different clients that have different lending needs and different lenders. You can come through this. Oh yeah. Oh, they blocked it with the chairs. Open the garage door for them. That would work. No, you can't come in. You're late then. Sorry. Yeah. And so you're going to have people that have different needs, and different lenders have different products. So you might have a lender that can do a lower credit score than a different lender, right? And they've got products for that. You might have a lender that's got a different down payment program. So you want to have multiple lenders that you work with for that reason. Another reason I would recommend multiple lenders, guys, and getting into a relationship with multiple lenders is there's going to be times when the personality of your client needs to match up well with the lender. So when I first got in the business, I had a wonderful lender walk into one of my open houses, and she was very much a motherly figure. She would be like similar to the age of the mother of many of my clients that were in my network. And I thought, and you're a hustler, you're out on a Sunday attending open houses to get more business. I think we think alike. Let's do this, right? She worked really well for a lot of my clients because it felt like they were working with a parent that was helping them guide them through the lending process, right? She also liked to talk a lot. I think that was comforting for a lot of those clients. I had other clients that were to the point business. I could not send them to that lender because they would she'd annoy the heck out of them, right? So I needed a different lender for that personality type. Does that make sense? And so you kind of want to be able to say, and through the years, you kind of move through different lenders. So that's one thing, is you want to pick out where you have some diversity in your lenders that you're working with when it comes to their products, when it comes to their personality. I also will say that it's important to have that roster because you're going to get busy, right? And you're going to be sending them people. And there's times when you're like, I got like 4 buyers in with you, and that lender is awesome, but they get busy. And you're like, hey, could you do a pre-approval for me? We're getting ready to go out this weekend, and I want to make sure we have our pre-approval letter before we head out. And that lender is going to go, I think I could get to it. Like I could probably get to it maybe tomorrow afternoon. Like, and they might get too busy. And you don't want to be stuck in a moment where you're like, oh shoot, I don't have a backup plan and I need to get somebody pre-approved and my go-to is too busy. And it's okay for that to happen, guys. They're growing their business and they're doing this. And it's not their fault, right? Like they're in growth too, but you want to have a backup plan for that moment too. Some of the expectations that are completely okay for you to have with a lender or for you to consider with a lender, they get to set their own boundaries too. Some lenders are going to say, I don't work weekends or nights, right? That might be a question you have when you sit down with a lender and to talk about whether they're the right lending partner for you. Are you available for a pre-approval on a weekend or in the evening, right? Are you available to talk to my clients if they're wanting to know what their monthly payment's going to look like on a weekend? And it doesn't have to be that they say, yes, I'm available 24/7. You need to understand what your needs are and what the speed of your business is, right? And not every one of your partners needs to be available 24/7. I do think it's helpful to have someone that will work the weekend and will take a phone call on a Saturday morning at 11 o'clock to get somebody pre-approved or to answer some questions so that you have that ability. Does that make sense? When it comes to those expectations, you do want to be respectful. It's a two-way relationship. So if you are constantly calling your lender partner, as much as they love your leads, if you're constantly calling them on a Saturday and saying, hey, could you please pre-approve my person? Like, da, 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 and it's a fire, like a fire every single time. That's not fair to them. That's not a good two-way relationship, right? To do it every once in a while is one thing. To do it all the time is another, and not a good idea. Not what I would recommend. Typically, you are really going to want to try to get your clients to go through the pre-approval process prior to the weekend, prior to going out. Each and every one of you are gonna have a client that's gonna say, no, we just wanna go look, Elizabeth, like I don't think we're gonna make any offers anytime soon. Can we just go look at this one property? And you're gonna say, okay, fine. And then sure enough, they're gonna be there and they're gonna wanna write an offer and it's Saturday and you're trying to get them pre-approved. So often the script or the line that I would use and the way that I would motivate people to go through and go ahead and get pre-approved. Let's go ahead and go get pre-approved before we go look at that property, because I want you, just in case you do fall in love with it, I want you to have the ability to make an offer. And so I just want to make sure that that we have the ability in case you do really like it. The other thing I often would share with them as to why we're going to get pre-approved before we go out. Guys, I'd hate to go show you this $300,000 house that's like super turnkey ready and it's a great option, only to find out that you don't really feel comfortable buying a $300,000 house. Like, I want you to feel confident and comfortable in what you're pre-approved for, what your monthly mortgage payment is, and all of that prior to us going out and looking. Similar to when you go wedding dress shopping, don't show me, this is my budget. I'm gonna kid you not. This is my budget. Do not show me anything over my budget. I literally was like, I'm not looking. Nope, don't show it to me. Because I don't want to show you a $300,000 house if you can only afford or only feel comfortable buying something at $260. Because I don't want to forever ruin you with that $300,000 house. Does that make sense? A lot of times that's helpful in getting people and really kind of putting your foot down. So as much as you possibly can, at least get them to fill out the application and go through a lot of that prior to the weekend, because it's always a fun scramble to try to get somebody pre-approved.
And the approval is more in depth than the qualification, or is that the other way around?
The pre-qual is when they don't call and check all of the references. Okay. So that, or like they don't check all the bank statements and stuff. Like a pre-approval is further down. Yep. What you're gonna, so again, we're handing them off to the lender. The lender is going to take care of things. Some of the expectations you want to set with your clients when they go to the lender is, and let me back up first. You have someone call you, we're ready to buy a house. Okay, awesome. Have you gone through that fun pre-approval process yet? Yeah, we're working with my local lender, or I'm from a small town and you know, my dad connected me with his lender here in the small town. Awesome. Okay, great. Would you be open to a second opinion? Let me explain to you why working with a local lender, which we talked about a little bit the other day, is important. They've got quicker turnaround. They've got a reputation here locally that's going to help us in winning in multiple offers. But always try to ask that initially of, would you consider a second opinion? Or like, would you be willing to talk to a second opinion? I've got a great lender. They may very well say, no. Like, I really want to work with my bank. I'm loyal and I really want to work with my bank. Okay, cool. Like, you can back off of that. You're going to get to make a new lender partner. And guys, I found some great lender partners from people that were brought to me by my clients, right? And then I was able to be like, you know what? You did a stellar job. You're going on the roster. Like, let's talk. Let's do lunch. Like, let's explore this further, right? But I would always start with asking them if they would consider a second opinion. I also think on your email template, and we'll work through email templates, but when someone says, I want to get pre-approved, I often would include multiple names on that email that I sent out to the consumer, to the buyer. The reason it's their name, the lender's name, their company, their email, phone number, and then a lot of times they're going to have an apply here link that you can get from that lender. Include that in that email, guys. It speeds everything up. Because more than likely that lender is going to pick up the phone and say, thanks so much for calling. Okay, great. The first step is for you to fill out an application. And if you've already included it, they can say, oh yeah, I see Elizabeth's included that link right here. I can click on it and go ahead and apply. And everything you're doing, you're trying to speed up the process. You're trying to make it easier on your client, right? And that helps you, because the faster they get pre-approved, the faster you're able to make an offer with them, okay? The reason I include at least 2, if not 3, is because if you do not give a lot of people options to be able to shop the rate and shop the closing fees and the lender fees, they're going to go find those options on their own. And that's when you end up working with US Bank or Rocket Mortgage or whatever. And so if I often would provide them a couple different people they could call and work with, then they were good with like, okay, she's not just saying this is a one person and I need to go make sure that somebody else is a cheaper. They got to call through my roster and people I'd worked with before, and they felt like they had options, and everybody likes options. Now, I will tell you a couple things. Some people will say, Elizabeth, you can send me 3 names, but like, which one should I work with? I just like, you're gonna have consumers that are just like, just tell me what to do, right? And then I'd say, yeah, go ahead and call that first one is who I think you should work with. With that, I had my 3 lenders I had on that email template that I sent out every single time, right? Again, personality based. If I knew that client from our initial consultation and I got a vibe from them, I would rearrange the name of those 3 people so that the person was probably the best fit for them was at the top of the list. Okay, I know that sounds like a minor detail, but it does make a difference, right? So if the person that's going to annoy the hell out of them, I don't want them being that first person they call because it decreases the chance of them calling anyone else on my roster. And again, I'm working with Bank of America and my life is a living HELL for a while. No. So little details like that. I know sometimes it's silly for me to share those things with you, but that would be what I would recommend doing. You're going to want to tell them to ask the lender a few questions. And these are questions you're going to ask them as well when you're sitting down and interviewing them to be your lender partner, right? And guys, it's not hard to get a date with a lender.
I have one today, so.
Right? It's really not hard. Yeah, I mean, yeah, no, that's great. To get a coffee date or a lunch date or like whatever, right? Like I would say I've always like was trying to be respectful where I'm like, dude, I'm not gonna just go get a free coffee. That's just me. If I was all good on my roster, but it's not hard to get a lender date when you go meet with, I know he's loving it, right? I'm funny. You came in late. You didn't understand. I'm really funny today. So I would say when you go, you're going to ask them, how long do you need to process a loan? That's extremely important for you to know as an agent. And like, what's a reasonable amount of time? Okay. And they're going to tell you, Elizabeth, I really need 30 days. There's some times when COVID was going on and things were changing, or if a policy changes, a lot of times they're going to say, oh man, I really probably need closer to 45 days now. And so that's important for you to know so that you're not going and writing an offer and writing it as a 27-day close if your lender can't accommodate that, or you're not writing a 30-day close, they really need 45. It's also going to make a difference based on what type of loan it is. So if it's a VA loan, they probably, and you'll want to ask that, like, so on your conventional or FHA, are you good with 30 days? On your VA, how long do you need? And those are things that you want to, and each lender can be a little bit different. Most of them are going to say 45 to 60 days on a VA loan. It's like super warm in here today too, isn't it, guys?
It's very warm.
Yeah, does anyone want to go ask Nick if he can? Oh, actually, let me do this. I'm going to just walk over here. I can handle this. It's set to 70, guys. Maybe that's why. 79 degrees in here. This is how I keep the temperature. I keep my house, my own personal office, but like you guys don't need to look like this. My apologies. So it's going to be pretty similar, 45 to 60 for a VA loan. FHA you can typically do in 30. There will be some lenders, Fairway Mortgage, Tanner is one of them that I know that can get people through underwriting ahead of time. So they're able to close a loan in as quick as like 21 days or in as quick as 2 weeks. So you're going to say, what's the standard and what should we go off of? And when I get in a pickle, how quick can you close a loan? Okay. And that's something that you're going to like retain and have in your back pockets when you're out showing clients and you're connecting them with people that you know what you've got that you can do. If someone tells you I can close a loan as long as they get their paperwork in and they're good in 21 days, you're still going to pick up the phone when you're writing that offer and saying, yo, Tanner, can we really do 21 days? Like, let's look at the calendar. Do we have any holidays coming up? Like, blah, blah, blah. The other thing when you're writing tight closings like that, even if it's a 30-day close and there's some holidays in there, think about the people you're working with. And I know we're not supposed to, we don't judge people, but you also are like working with them. You get a vibe of a person. There were some clients I knew, paperwork was not their thing, right? Finding bank statements and doing some of that stuff was just not going to be a priority. So I wasn't writing quick closings for them because, you know, I knew that it was not going to be something that they were diligent. Now I had other clients that were type A's and were like writing me so very, very tight that I knew that like they would have their paperwork in and do everything they needed to do. And so we could sign up for a 21-day close. And I was confident that they were going to perform. Does that make sense? So slow down and think about who you're working with. Okay, so how long it takes them to close a loan? Ask them about what their fees are. And this is something that was always hard and frustrating for me. Some of them have origination fees, some of them have underwriting fees. The way that it works is they can call things different things. And when you try to compare two lenders' loan estimates side by side, you're gonna hear things like, it's not really apples to apples, because one will call something this and another one won't have that, but they'll have this fee, or they'll have it broken out into like 3 or 4 fees, and then this one doesn't have it. And so it's a little confusing to the consumer, it's a little confusing to you, but understand what their costs are, because you don't want to have a lender who you're sending people to and their fees are so much higher. I mean, that was always important to me. Like, you can send me all the tchotchkes you want. I don't really care about the tchotchkes. I want to make sure my clients are getting the best fees and the lowest interest rates and the best service, right? So you're going to ask them what their origination or what their fees are as a lender. Recording fees and appraisal, all of those things are going to be consistent across the board with any lender. If you need help deciphering how to look at those 2 loan comparisons, come find me. Happy to walk you through and highlight for you what the difference is, so you can really truly see for a client what the difference is. I had buyers one time, they paid $2,200 extra to work with Quicken Loans. I could not convince them that they should go with this local lender that was $2,200 cheaper. There was nothing I could do. I don't know what happened and what Quicken did to them, but they went with them, right? But I even went through and highlighted the 2 and showed, like, you're getting overcharged. But that is something that you might need to do. And if so, fine, we will help walk you through comparing that for your people. Okay, so that's what it would roll when you talk about a loan. And I think I'm going to have Tanner's video. He's going to go through the loan process with you. But you're going to have 2 different things when it comes to a lender, and lenders have a different language than us when they say closing cost. Okay, do not get confused. We say closing cost, and what we mean are closing costs and prepaids. So a lender has closing costs. That's the origination fee. That's the recording fee. That's the appraisal fee, right? And they call that closing cost. They also have prepaids, which are where you're setting up the escrow account for the borrower, which is their taxes, their insurance, and that goes into a escrow account. So when you ask them, what are the closing costs for this borrower, depending on who you're talking to, make sure you're talking the same language. And when you're asking a lender, what are closing costs and prepaids going to be for this client? Because you want to make sure you have both of those, because that's the cash that the client's going to have to come with. Does that make sense? And when you look at their loan estimation, it's going to be broken out separately. So if they give you a loan estimation and it says closing costs are going to be $3,000 and prepaids are going to be another $2,000, you be sure that you know to add those 2 together if your client needs help with closing costs, or if you're setting expectation on what closing costs can be. Does that make sense? No. Candace, no? Okay. So there's 2. So closing costs are going to be the fees, and then prepaids are setting up. So every borrower, when they get a loan, the lender will require that they escrow for the taxes, so that when the taxes come due at the end of the year, that there's enough money in that escrow account to pay the taxes, because a lender is always going to pay the taxes and the homeowner's insurance for the buyer, for the consumer. Yep, so that's the escrow account, and those are the prepaids. So at closing, the borrower is going to pay for 1 year's homeowner's insurance, so that they've got 1 year's homeowner's insurance. Then each month with their monthly mortgage payment, they're paying principal and interest, and then they're also paying a portion for what 1/12 of the homeowner's insurance is for the year, and what 1/12 of the taxes are for the year. And those 2, the taxes and the insurance, get put into the escrow account. And then depending on what time of year it is, they're going to pull out and pay the taxes. They're going to pull out and pay the insurance. Okay. And so those prepaids are like, they have to get, that gets created at closing, and they put 3 months in there. Now there's some funny math, and this is again, where go talk to the lender about it. There's some funny math where they're only allowed to have a certain amount in that account. So sometimes you're going to see they're going to put 3 months in, and then they're going to deduct some out, but that's what prepaids are, is setting up that escrow account. And for your consumer, and on our side of things, we call closing cost, but we really mean closing cost and prepaids together. So if you have a consumer that says, Elizabeth, I really need my closing costs paid because I don't have enough cash for that. First of all, good luck getting an offer accepted. Second of all, it's both of those things, okay?
And the appraisal, do they pay for the appraisal at closing, or do they pay?
It depends on the lender. So
Okay.
some lenders are gonna have a policy that they're gonna have your borrower give them a credit card, and they're gonna put that $400 or $600 for the appraisal, and they're gonna charge them at time of ordering the appraisal. Okay, and you wanna warn your clients of that. That way, if something goes sideways and the deal falls apart, the lender's not on the hook for that appraisal. Some lenders do not require that they put down a deposit on that appraisal. And they're gonna just eat it if it falls apart. Okay, and that's something to know so that you can warn your client. If your client is giving them a deposit and giving them a credit card for that $400 for the appraisal, let's call it, at closing, they're gonna get a credit for that $400 and a credit for their earnest money, right? That's a part of that. Sound good? Yeah.
So when you say that, good luck getting your offer accepted, can't you roll the closing costs into the loan amount? and
Yeah,
then
I'm glad you're asking. Yes, you can. And but it's a term in the contract, so let's talk about it, okay? I appreciate you. I'm very curious. Is anyone else curious about how that works? Like what they've heard about that? Okay. So the way it works with closing costs, we're gonna use our $300,000 house as an example. So it's listed at, ask price is $300,000. I love writing on boards in front of people. No, it's like terrifying. It's math. There's a lot of math. If you ask me to spell a whole bunch of stuff, I'd be like, no. No, thank you. Maybe somebody wanna help me out here?
I was gonna get my calculator.
Oh, well,
Oh, no.
I was more worried about the camera, sweetheart. Okay, now we can see. Okay, perfect. I really need to hire a camera guy. I talked to Steve yesterday about remember the admin I asked for? And he was like, well, Elizabeth, and I'm like, I don't think he's gonna say yes to a cameraman. Or woman, or camera person, Elizabeth. Okay, 300,000 is what it's listed at. Let's just say we talked to the lender, and the lender said between our prepaids, let me write it out that way. Okay, our prepaids for this, let's call it $2,000, just to keep the math even. And our closing costs for the lender are $3,000.
And you're not counting down payment in that, because they
Nope.
have to come at closing with the down payment as well.
Correct. Thank you for putting that up. So if they're gonna put down 10%, they're gonna also have a down payment of $30,000. Okay? I'm saying this is what we as agents call closing costs, the total of these two, okay? So, and they're putting down the 30,000. The reason why it's important is that your person needs to have $35,000, right? So Candace, if they want, yes, you can roll it into the loan, and yet it's a term in the offer that you're writing. Because you're gonna have a purchase price on that contract of $300,000. If you ask the seller for seller paid closing costs, which is a line on the contract of $5,000, this is taking their net actually to $295. Okay? So you're actually offering that seller $295. And so you're going, yeah, we made you full price offer. I don't know what the problem is. Like you said you didn't have any offers, like full price offer. No, they're offering an offer of the net to the seller of $295.
So
it's
why,
Candace, go ahead.
why would you do that? Why don't you just offer $295 as your?
Because seller paid closing costs. So instead of your client coming up with this and this, the seller's gonna pay this $5,000.
But if
And
you offered $295, you should have the $5,000. It seems like 6 of one, half dozen of the other.
no, because your loan is paid, so if that's, because if your seller's paying us $5,000,
Right.
then you're not having to come up with the $5,000.
Got it.
Okay, so then as Candace is saying, sure, let's just roll it in, that's not a problem, Elizabeth. Let's just make our offer $305 with the seller paid closing cost of $5,000. Problem solved. There you go, your net, your $300,000.
Oh, yes, okay.
Okay, awesome, seller's happy, they're getting the $300,000. The problem there, and where you'll get pushback, is now instead of the property having to appraise for $300,000, now it's gotta appraise for $305. So sometimes there's pushback there. We're like, well, God, we're right kind of close on the line on this one, Elizabeth, like, what if it doesn't appraise for $305? And your people are gonna still need $5,000 in close, like, it's riskier for the seller, does that make sense? Especially with the values getting up there and appraisals getting kind of wonky. And if your people need $5,000 in closing costs, they're sure in the heck not gonna make a difference on an appraisal.
Right.
So that makes, see how it makes sure, even though you're making it right, That's where, in the same kind of, does that make sense how you can roll it in? Because now their loan is based on 305 instead of, and then,
So,
okay, go ahead.
Can you offer 300? The lender knows you need 5,000 in closing costs. The lender then rolls that in. It has nothing to do with you, what you offered. They pay 300,000 for the house, but your loan is 305.
Say it again.
Okay, so you offer 300 for the house. So what the seller's gonna get is 300.
Correct.
But you owe 5,000 in closing costs. You don't have the cash. So the lender can then add
Yes.
to your loan and make your loan 305.
No, not exactly. I'm back, and I was gonna go there, so thank you
Okay.
for leading me right into that. That was the next thing I was gonna share. There are ways, and when you're talking to your lender, there are ways for a lender to do a lender credit. And the lender can do a credit to where they can give them a higher interest rate and maybe pay 3,000 of the closing cost. Does that make sense? Not always all of it, but they can pay some of it, but they're gonna be at a higher interest rate to do that. So yes, sometimes a lender can give a credit and make it to where they're not having to come up with the cash, but they pay a higher interest rate.
Okay, so even if, you offer 300,000, it needs some work. I need about 20 grand to be able to go in and update it. Is it possible for a lender to give you the 320 that would then, and that's based on what it would
Okay, yes.
appraise at?
It is, that is a different product. So remember I talked about different lenders have different products.
Mhm.
That's a different product. Fairway, I know, has a product like that, where but you have to use their contractors. It has to be like approved ahead of time. You have to get it done within 6 months, and that's where you're gonna wanna ask for that specific product. Okay, any other questions on this? Does that make sense for everybody?
Does that product have a name? Do you know, or just no? I have
Um,
a Fairway lender, I'll ask her, but.
Yes. Yeah, it does have a name. It does. And anytime you go on that route, guys, it's super fun. Like, no, it's extra work,
Yeah.
but they'll do it. It's okay. Okay,
Yes.
yeah, no. And that's what you, but you have to, guys, you make sure, I wanna make sure everybody understands that, because you have to explain that to your clients. And they're gonna be like, well, I don't understand why they're getting upset. We're making a full price offer. Or what do you mean we could roll it in to the loan? So if they're rolling it into the loan, though, they're borrowing more money than sometimes, you know what I mean? Does that make sense? They're like hurting their loan, the equity that they have in the house in some senses. Okay. The other piece, those are kind of the things that I would talk to a lender about, is knowing those closing costs, how long it takes for them to close a loan. And the other piece, and let's talk about this really quick when it comes to the appraisal, and then let's see, because I think this math stuff is really good. This is the stuff that usually you're like, okay, wait, I don't understand. Why is this a problem? Let's use our $300,000 house as an example again. So $300,000 was what the purchase price was this time, okay? We're amazing agents, and we got it badass for these people. Your client is putting down 10%. They're gonna pay their own closing costs. Woohoo, yay, thank God. I would highly encourage you to get your people to pay their own closing costs, okay? Because it just makes it so much easier to get an offer accepted, and your math is like so much better. Okay. So. So you purchase price of 300,000, they're putting down 10%, okay? And then their loan amount is 290. If, what?
I did not want that.
Okay.
Camera facing you.
You're so good. Thank you. Okay, look at that. Who needs a camera person?
There's
Okay.
one PC student.
Right, right? Okay, so your loan amount is gonna be the 290. Now, the borrower, and like, again, we're not gonna talk loan to value. I don't know what debt to income ratio needs to be or whatever that might be. Let's say that the loan amount is based on a loan to value. You're gonna hear them use these terms of 90%. Okay? Uh-oh, appraiser went out, they're saving the world. They're saying that the house is only worth, you're laughing, because you probably heard me say that to people. They're like, oh, nope, this house is actually only worth 295. It's the appraised amount. Okay,
Okay, before you go on, can I ask a quick question?
Sure.
I am not good at math, but
okay,
I swear I've done this 10 times. 10%
Okay, yeah.
of 300 is not 10,000.
That's where I was confused. I
Okay,
I don't
okay,
say
okay.
anything, but I was like.
No, it makes sense.
Okay.
Honest.
But I am not good at math, so I was
Actually, no, sorry, this was a test, and you passed. I now know who I can trust in the room, okay? I now know, and I even asked you what. I told you spelling is not my thing. I also warned you that I don't like to write on the board in front of people.
But math is
okay?
not my thing, so seriously, I'm thinking, oh my gosh, math really
God.
isn't my thing. I cannot come up with this number.
Oh, I thought they were just putting $10,000 down. I thought that's
Yeah,
what they meant.
that's, I think I understood.
That's probably what I thought.
Yeah,
yeah.
I only had half a banana, people. Come on. Jesus, like, jeez. Okay, so we're at 270. Is that math right now, guys? Okay. Oh, I've never friends. I've never friends. Okay, so I'm gonna change the math over here. So now it's appraised at 290. Okay, so everyone, we're still loan to value of 90%. It appraises at 290. They're gonna come back and you're gonna say, okay, what's the big deal? It's worth 10,000 less. Can we just change the loan amount? Like, but the loan amount is based on 270 with them putting the 30% down. If it only appraises at 290, then it drops the loan amount. This is why I don't do the. Does that like make sense?
Uh-huh.
No,
So
sorry.
they're still putting 30,000
Sorry.
down.
So they're at 270. And that messes up our loan to value. Does that make sense? Because we're no longer at 90%. And that's why somebody has to bring the extra 10,000, or the sellers have to agree to lower the price.
Right, but isn't that what typically
Does
happens?
that make
Either,
sense?
I mean, isn't that what typically happens? I haven't had this situation, so I am really curious. You go back, if you didn't have an appraisal contingency or whatever in
Yeah,
there,
You have to go back and agree.
say,
what happens
hey,
to this
it's
10,000.
290, that's, I mean, there you
Yeah,
go.
sellers have to agree to take 10,000 less, so then it'd be based on 290, and then your loan to value would still be okay, because you're gonna be 90. Does that make sense?
I was dealing with buyers that the seller decided not to lower the
Are you
price
following?
and they came to the contract.
You're like,
Yeah.
Yeah.
no?
Yeah.
We'll do that.
But
Okay.
your buyers couldn't.
In
come up
order
with
for the loan to
cap,
work
so-
for the consumer, it's based on a loan to value of 90%. The interest rate is dependent on that. The debt to income stuff is dependent on that. Like you could get like a approved and an interest rate based on your debt to income and all these other factors, based on how much your loan to value is. So the loan amount of 270 to the 300,000 is a 90% loan to value. If now all of a sudden it's 290, and you're like, well, what's the big deal? In order, if they don't adjust the price down to 290, then your loan to value amount, like, can't we just increase, like, does it match up to still be 90%? Does that make sense?
Yeah,
Somebody has to make up the difference, or the amount has to drop down to 290, so that when you put your 10% down, you're still at a loan to value of 90%.
just so I understand. So an option could be that they give 10,000 to the seller. Okay, it's 290, but I'm gonna give you 10,000. That now I only have 20,000 to put down. So you go back to the lender and you say, okay, I can't put 10,000. So now what can we do?
Correct,
It
because you're
might
only
change the
putting,
interest rate, but
because you're only putting 20% down. I'm
Right.
gonna just get my calculator out, so the
20,000, not 20%. 20,000, not 20%.
Correct.
Yeah.
Thank you.
It's okay. I am really bad at math, so that's why I'm trying to make sure I.
Your loan to value is gonna be 93%. If you, so let's say, okay, you've got $30,000. Okay, guys, it only appraises for 290. Someone has to make up the 10,000. So you're like, fine, take 10,000 of my down payment and give it to the sellers to make them whole. So we're gonna take 10,000 here, give it to the sellers. So now I only have $20,000 to put down on the property, so the other 20,000 goes here. And it takes my loan value to be 270. And if you take 270 divided by 290, it's 93% loan to value.
And isn't that possible that the lender could do that? It might change your interest rate, but it's possible.
It's possible, yes, it can be possible, and yet it'll mess up the interest rate, and that's where they're getting squirrely and are like, no, that's not. And when you're running tight lines, it's something when you're like, oh, they were gonna put down 43%, now they're only gonna be putting down 37%, it's different. Does that make sense why that doesn't necessarily work?
Yes.
Okay, I'm not very proud of this one, so we're gonna go back, okay? I will practice that script, so the next time I explain it to somebody is better. Okay, that's just like you practicing your scripts to go talk to a buyer
You did great.
or a seller. No, I didn't. That was horrible, Candace. I'm okay with that. It's good to admit when you're like, I have opportunity for improvement.
No, actually, that was really good because it's real life. And sometimes, I mean, numbers change and it gets, there's different scenarios. So it is confusing and I'm glad it's confusing for other people. as
Right?
well.
Okay.
Yeah.
Right, yeah. It's natural.
Excellent. Okay. Any other questions when it comes to that relationship with the lender? Anybody? Nope. Okay. If it's okay with you, I'd like to kick off because it'll work out perfect. I've got Tanner's training that he did. He could not be here today, because he had a conflict, but he's done the loan process training. So I've got it kicked off if you guys want to watch it together as a group. Is that okay? Okay. And then I'm gonna eat the rest of this banana. Oh, wait, actually, just kidding. Before I do that, just kidding. I did promise you that I would talk to you about contingencies and contingency options, okay? There are a couple, you're gonna have people that are like, Elizabeth, I'm so excited and I totally want to buy a house. And yet I live in this house that we're standing in right now, and I need to use the proceeds from this house to buy the new house. And, or like, how does this work? Okay. Typically, you're gonna say, again, go talk to the lender, and the lender's gonna tell you whether you can buy another house without selling this house. And in order to do that, they've got to have a certain amount of money in reserves. They've got to have to where they can make payments on both properties for 6 months. There's all kinds of rules, right? You would be surprised how many people can actually afford to buy a home without selling the current home that they live in. Partly because a lot of consumers are pretty conservative on what they buy. So when they bought that first house, they might have been able to qualify for a $400,000 house, but they bought a $225,000 house because they said, Elizabeth, I don't want to be cash poor, or I don't want to live beyond my means. Okay. So that might be one way. And they might have bought at the max of their limit, right? And they went and bought that $400,000 house, but they've lived in that house for 3 or 4 or 5 years now. And their income levels have also increased to where now they qualify for that $400,000 house and the $500,000 or $550,000 house they want to go buy. So you might be surprised when people actually can't afford to do both, but explaining to them what their options are in that are a whole different story. So let's talk about, I created this because as you can see, my drawing on the fly is not always the best. And as you can imagine, at a listing appointment at 7 o'clock at night, when I haven't had dinner, I was even better. Food is important. We haven't talked about that, but it's important and keeping your ability to explain things. So this is a diagram or something that I created to be able to walk people through their options when I was at a listing appointment. I have this with both the Plaza logo on it and the Overland Park logo on it. I will include it when I send out the videos for yesterday and today. So the first option, and I'm going to zoom in, guys, and there are more options than this. These are just the 3 I typically would work from. And I would say, okay, so option 1 would be you talk to a lender, and if you can qualify, not contingent on the sale of this house, then we could go look for a new house. We could find it for you, and then we can negotiate a longer close. So we go find that new house, and instead of doing that 30-day close, we're going to try to get a 60 or a 70-day close. And while we're looking for the new house, we're working on all the things we just talked about that we need to do to get your house ready for the market. So as soon as we find the new house, we get through inspections and we know we're a go, we can put your house on the market. Okay. And so I'm reducing the gap here between, so this is a goal closing date that we wrote on the new house. If we're getting this house ready while we're out looking for this new house, then we're in a position that we can pop it on the market super fast, like within 2 weeks if we need to, or within a week if we need to. Does that make sense? So I'm lowering the risk of having 2 house payments at one time. That's people's biggest fear. I don't want to be on the hook for 2 mortgages, Elizabeth. Cool. Well, we're going to reduce the chances of that by getting your house ready while we're looking for the new house. And then we're going to, once we make it sure that we're moving forward on the new house, then we're going to pop yours on the market and we can negotiate a shorter close on that one. No guarantees, John and Jessica, that we're going to be able to line up the dates perfectly, but we could try. Just know so that you could work it out to where if you are able to be lucky and you do, and all the stars align, that they could end up closing on the sale of their home and closing on the purchase of their new home at the same time. In doing that, guys, pay attention to your closing date and your possession date. Does that make sense? You want to make sure that you're lining those up carefully, and that when you're negotiating the current home that they have, you're asking that the buyers give them possession after closing for a certain number of days, so they can move their stuff into the new house if you want to line it up perfectly. Does that make sense? We can talk about that another time, but those are negotiable terms and important to understand how it all works. Okay, the thing in telling them that, and that is like, that is a possibility. We could possibly do that. John and Jessica, what I need you to understand is something were to happen and we end up not closing on your current home and that doesn't work out perfectly, you do have to be prepared to close on the new house without your house selling. So if we go this route, we got to be prepared to like go ahead and close and use funds from somewhere else to buy the new house. But this is an option, this is a way we could go, okay? And you can let them know there's different places they can get that money from. The lender will talk you through that. You can borrow money from your 401k, you got to put it back within a certain number of days, that kind of a thing. And there's another option to walk through with people that we can explain. Okay, does that make sense on option number one? Some people will be like, oh, okay, that makes sense. And we're going to talk Monday about timelines. And so I will use that opportunity to explain a little bit about how there's some tricks you can do with when a mortgage payment is due, because it skips a month kind of a thing. So we're going to talk through that in detail on Monday. Another option for contingent and on the sale of a home. You can offer and to them a second option would be that we go and find the new house. We make it contingent, not contingent on the sale of this house that we're standing in right now. You go ahead and do a shorter close, 30 days. We move some of your stuff, all your stuff into the new house, and then we put this house on the market. And then we try to negotiate a shorter close, right? That's another option. You will have people whose shoulders and their whole face will just relax, right? They might even get up and go get themselves a glass of wine because they're like, oh, awesome. We have multiple animals, multiple children, stressful lives, and way too much stuff in here. Does that mean we don't have to do all that staging you just talked about? We don't have to move things twice? Yes, it does. Like, okay, let's do that option. Okay, some people that will work better for them because they don't want to deal with the showings and preparing their house for the market. They'd rather just move everything out, and they have the financial abilities to buy without selling. Make sense? Again, it is their choice, not yours. Selling a vacant house is not as awesome and fun as selling a staged house because the imperfections show up a little bit more, right? But that's option number two. Any questions there? They can still not have 2 mortgage payments in that scenario if you time things properly. We're still going to be getting their house ready while we're looking for the new house. Does that make sense? Even though we're going to just empty it out, I still want them doing the wood rot. I still want them going around and decluttering and getting rid of stuff and getting, you know what I mean, like trying to make it so we can move as quick as possible once they move. The other thing I will warn you about is that there are going to be times where they're going to say, oh yeah, we'll leave you some furniture, Elizabeth, like no problem. Like we can leave some stuff behind. They're lying to you. They're not going to leave anything. They're going to take everything. They're lying to you. So just go with the sense that they're probably lying to you and you're going to be selling a vacant house. Okay. At that time too, you might say, hey guys, you live in a 100-year-old home in Brookside. And if I'm selling it and it's vacant, like, just so you know, we'll have this conversation that it might affect our sales price a little bit because staged homes do sell for more, kind of a thing, but just know they're lying to you. And it's not about you, it's about them. You're going to be able to sell it no matter what. So it's okay. Okay, the third option is if they either cannot qualify, not contingent on their home. So if they have to sell their house before they can buy the new house because they can't qualify for both homes, or if they don't feel comfortable doing that. You'll say, okay, so we're going to go ahead and list your home. We'll receive offers. We're the seller. We're in control. We're going to negotiate a longer close. We have more runway to go find you a new house. And then once we get your house under contract, then we're going to go out and make an offer not contingent on the sale and close of your home. Okay. That freaks some people out. Because they don't want to compromise on this next house. Like they compromise, you know, like, no, we ain't moving again. This is the one, like, I don't want to compromise. Some people that raises their blood pressure so much more. And if there's someone that can qualify, but before didn't want to because it felt too risky, all of a sudden their blood pressure, like they're going, oh my, okay, wait, actually, let's go back and talk about option 1 and 2. Like that actually feels less risky because I'm not going to have to compromise. I can make sure I find what I want I can't tell you the number of times people were like, actually, Elizabeth, the way that you've explained it, especially using the timelines, let's do that. That seems so not risky, as what I was thinking. And I'd much rather not have to compromise on the new house. You're gonna have some clients too, that this is their only option. And you're explaining to them that we can give you a longer runway, but who can you move in with if we don't find something in that time frame? Or are you okay with moving into an apartment for 3 months or until we can find something, right? You would be surprised that there's gonna be a number of people that are gonna raise their hand and say, we can go live in my parents' basement, like, not a big deal. Like, I'm totally fine moving into an apartment. And you're thinking in your mind, like, that sounds horrible. And yet for their stress level, for their mental state, they would much rather do that because it's so scary for them to be on the hook for 2 mortgages possibly, or they don't have a choice. Okay. Got to meet people where they are, support them and make it as much fun and as cool as possible, kind of a thing. Okay. Does that all make sense? Again, there are other options to do that. And yet I wanted to walk through that with you. Okay. I have 2 choices. They can either explain to you recasting, which is an option for someone to use, purchase that. So it's like how to do option 1 with the loan stuff. Or I can play Tanner's video for you. And you guys can watch Tanner's video now, or I can send you Tanner's video to watch as like homework. And we can go through a recasting. Should I just make an executive decision?
I'm gonna ask that you go through recasting and we can watch Tanner's video because I don't even know what the word means.
Well, and since you're my favorite today for helping me with the math, we'll do that. Candace, you're doing really good, but she slipped in there with helping with the math and making me not look like a total idiot, okay? Okay. Are you guys doing okay over here? I know it's like super hot. Should we open this door? Can we do that too? Like we've got 40 more minutes. I don't know if you guys are just surviving.
We have 44 minutes or stuff, it's going to 11:30. 40 minutes, is this good only?
I don't.
I think it's 10:30. Oh, perfect, but I could be wrong, is that what everyone else thinks?
So yeah, let's go through the
Right. I could be
I'm
wrong.
showing 12 Zoom.
Oh, you said 12, okay, I messed it up then.
Ah, it's because, you know, the schedule. It's good times. Okay, so I've set this up to where I'll walk you through the example. What this is, guys, is this is a blank worksheet, because again, oh my God, you feel that? Woo! I like it warm, but that was really warm. This one is a blank one for you to fill out with your clients and leave with them. Does that make sense? I wanted you to have one that you could fill out with their information. I have this branded for both Keller Williams Plaza and Overland Park, but let's walk through an example. So again, we're going back to where we've talked to our clients and explained to them how they could magically do this whole non-contingent, and we're going to help them not have to, you know, reduce the risk of 2 mortgage payments. And yet they've given us another objection. But Elizabeth, you just told me my house is worth a ton of money. And that's awesome because I have a lot of equity in my home and I want to use that cash, that equity, for the down payment on my new house. So many times there was an aha where I kept getting pushback from people. And we're like, we would love to move, but like we heard non-contingent or contingent offers aren't getting accepted. And I want to use the money in my house right now for the new house. And that's where it was like an aha. I knew about recasting and I'm like, I need to do a better job of explaining this to people. So let's use the example that my clients, John and Jessica, want to buy a new home. We've determined $400,000 house is what they want to buy. Okay. But yet they want to make sure they put 20% down so they avoid mortgage insurance. Okay. So we need to have $80,000 for that new house in order for them not to get mortgage insurance. If you were to do recasting, you can talk to John and Jessica and say, do you guys have the ability to put $20,000 down now, 5% down now? Okay. And not contingent on the sale of your home. So again, you can go find that 20, it could be in your bank account. It could be something you're borrowing from your 401k, your folks are giving to you. I don't talk to your lender. I don't know. You find $20,000 for the 5% down. Okay. So we're writing the offer on the new home and the lender has approved them with 5% down on the new house while still carrying their old mortgage. Okay. So we write the offer, they're going to put 5% down. And then we're going to list their current home, which I've told them is a value of $250,000. And in that 250,000, they have $100,000 worth of proceeds. Does that make sense? So we go and close on the new house, or whenever we're gonna close on the new house. That's the plan for the new house. This little house down here is our plan for our old house. So they close on the new house. It's got a loan to value of 95%, a 30-year loan with a 2.875 interest rate. You can tell this is dated, right? Because we don't got those interest rates anymore. Okay, so then we're gonna list their new home, right? And we're gonna get it under contract. We're gonna sell it for the 250 we promised them, maybe a little bit more, but we're gonna stick with the 250. And then we're gonna take that, is everyone following? We're taking the proceeds, that $100,000 in proceeds from the sale of their home. We're gonna take 60,000 of that, and we're gonna apply it to the new home's mortgage. Okay, so that we get our 80,000 that we needed. So at least 60,000 of it we're applying to the new home mortgage, and then we're gonna recast that loan, okay? What that means, guys, is it's going to stay a 30-year note. The end of that loan is not changing, okay? It's gonna stay at 2.875% interest. The loan to value is gonna go to 80%. So instead of owing, help me, instead of owing 380 on it, they're going to owe 320 on it. Yes? Yes. Okay, so the loan value is going to drop, and then they're gonna recast that loan amount across the 30-year note. So if they're, let's say their mortgage payment with the 5% down was $2,000, just for fun. Once they recast that note, it might drop their mortgage payment down to $1,500 a month. Does that make sense? Because we're recasting it against the new loan amount. Okay, so then they have the other $40,000 they can do whatever the heck they want with, okay? They can replenish their rainy day fund, they can buy new furniture, they can go on a vacation, I don't really care, that's their business. Okay, so that is recasting and how that works. Does that make sense?
You have to talk to the lender that you're gonna be doing that beforehand, or can you do that with?
Any
No
lender
senior
should be able to do it. It is a conversation you're gonna have with the lender, because sometimes the lender will resell a loan and you're gonna wanna give them a heads up. Like the plan for this buyer is that they wanna recast. So maybe don't sell this one, or like, so they have a heads up of what's going on too, and they're able to coach the client through it a bit as well. But yes, you wanna have a conversation ahead of time. The cost to do recasting, guys, is typically right around $300. Much cheaper than a bridge loan. They do have to, there's a couple things that they have to do with recasting. One of those things is they have to make one mortgage payment. So John and Jessica are gonna have to make one $200,000 mortgage or $2,000 mortgage payment. And then they can recast the next month, okay? Note that like with the timelines, we all know, like we'll talk about this on Monday, but that might be a few months. You have to at least put $10,000 down when you recast. So you have to do at least 10,000. Okay. And then typically you don't have to do another appraisal. It depends on how long it's been, but sometimes you can use the same appraisal. So there's not another appraisal. There won't be setting up another escrow account. There shouldn't be. But it gives people a lot of buying power, because instead of being contingent, they're now non-contingent, and then go get aggressive on a new purchase. You can do recasting no matter, like with anything. It doesn't have to be just a home sale. So if somebody were to come into some money because they inherited a bunch of money, or what they, sold a nice car or something, you can recast for any reason. It doesn't just have to be this, but this is a huge tool for you, for those people that are kind of on the fence and they're like, oh, I really need to sell my house before I buy it.
And don't a lot of these conversations happen between the buyer and the lender?
The details of it, yes, because they got to know that they're comfortable with what that looks like and that they're qualified. But the concept, this is what I mean. Like, you can tell how I'm dangerous to like just know the general concept. I'm not talking to you about all of the details of what your loan to value, what your debt to income ratio or where you're getting the money from. But me being able to open this up as an option so they know to talk to the lender about it, kind of a thing is one thing, right?
Okay.
Does that make sense? That's your job.
Okay.
Have you thought, like, because you're at the dinner table and you're at the listing appointment, they're like, that's great, Elizabeth, but I have $100,000 in my house that I want to use towards the down payment. I don't want to pay mortgage insurance, kind of a thing. And your ability to say, well, there is a way, let me walk you through how this works. And I don't know about you, if I had significant others in the past, and often I'd have to like plant a seed. That thing would have to grow a little. And then the person would understand the concept a little bit better when they went and like, talked to someone else. So sometimes as an agent, you're like planting the seed so that part of your job is when you walked in the door, one of those two people or that person is, if it's a single individual, was going, there's no way in hell I'm gonna like buy another house without selling this house. That sounds so scary. And you're walking them through the concept of there's a way to do this. Here's how it is, right? And and then you're handing them back to the lender and saying, okay, now talk to them about recasting. And so like you walk out the door and don't be surprised if there isn't like a blah, 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 blah. Well, that doesn't sound as risky as I thought. And then we wouldn't have to compromise and then we wouldn't have to move in with our parents. And like, I don't like, I could last like maybe 2 weeks with my parents. Like, let's be honest, like cost of moving twice, like like that's where like that little seed then grows a bunch and then they go talk to the lender and then they come back to you and you're like, let's go. Elizabeth, let's go look at houses this weekend. Kid you not, how many times that would happen? Like people would be like, oh no, we need to be contingent. So take the listing appointment, even if they say they've got to be contingent on the sale of their home. And use it as an opportunity to explain that there are other options. Wait till you get to their house and you're sitting in their home so that you can control the conversation and all the emotions and it's a great time to see who your players are. Let's be honest. Whether it's a single individual or it's a couple, you can see like, he's the uptight one and she's the one who's like, let's do it. Let's risk taker, right? And like, this is a conversation where you're learning those things. But I kid you not, the number of times that people, like I got in their house and then they literally like, I barely was home before they were like, did you get that search set up yet? Like, here, I'm gonna send you a couple houses I found online. And we're available Saturday morning. You still have Saturday morning available? Like, let's go look. And I was writing offers and people were buying houses. Like, I kid you, I need to go back and look. I think $3 million one year was completely attributed to being able to master this conversation.
So can you send us this and also that other document that has your
Yes.
options?
And I encourage you, again, this one I created not too long ago because I would just draw it out, but this one I created like ages ago. Make your own if you would like, right?
Yeah.
But this is what I would have printed out, and this was in my folder that I went to a listing appointment with. Because your ability to explain things with visuals and leave those visuals behind is so crucial for then people are nodding, or you'll be sitting across the table from somebody and one of them will be nodding and is completely, I mean, just like today where I keep like checking in and be like, is that making sense? And some of you are like, huh? And I'm like, I can tell in your face, it's not making sense. And it's okay to say that it doesn't make sense. And I need to try to come back and explain it a different way. But I don't know if you guys have ever gone, like I go like, as you can imagine, spelling and writing on boards in front of people. Going to a doctor's office for me is really difficult because, and I have some, like I have rheumatoid arthritis, but there's some times where like they come at me with stuff and I'm like, that is a different language. I kind of got the general idea of what you said, but yes, I will take that pamphlet because I do not know what you just said. Or can you
Yes, so
write
that's how
that?
I feel about the recasting thing you just went, so if you could send that to us.
And I have a
recording.
recording of me going through it as well. So I'm
Okay.
happy to send that to you too. And Tanner goes through the recasting from the lender's point.
Oh, okay.
So I'm happy to include both of those videos to you as well. Okay,
I just have one question.
Sure.
about Recasting. So are the approval qualifications very different for that second home if they are planning on recasting versus if they're just going to be keeping both homes? Because they need to approve for the $400,000 house without the sale of their original home. So is the qualification the same for them approving for a second home versus planning on recasting?
yes, and they are changing April 1st. They're changing stuff about second homes because before you could get away with putting 5% down on second homes. Tanner went over this in the meeting the other day. And people were buying second homes and then turning them into short-term rentals because they were real cute. And then people figured that out. And so, yes, April 1st, things are definitely changing as a second home. And yet, because you're saying if they were to keep it as they're gonna.
Well,
either-
yeah, but not having to sell their home to qualify for it, then it has to be categorized as a second home because you're going to have a second home versus this is going to be your primary home and you're going to be selling that. So you don't need to make as much income. to
You're
pay for
asking a
both.
really great question, and you
Okay.
also get bonus points today because that's a question for a lender. I don't know.
Fair.
I don't know if it's like, well, the intent is they're gonna sell this one within a certain amount of time. I do know there's some rules about like distance between two properties. And like I mean, like people understand that you are gonna buy one and like whatnot. So like, that's a good lender question.
I have seen they just charge for the interest for the time being.
In between. I don't know if that's a bridge loan or if that's like a specific product to a certain lender, but that might be. I know that like construction, like there's different loans I have like business wise that I could charge interest only while I'm doing some work on something, but that would be, I'm not super familiar with that. And I'm not super familiar with bridge loans other than they're expensive and like not as easy as this. I mean, $300 and using the same appraisal, that kind of a thing. You can lock your interest rate in. Now, any of these options, another fair warning. I'm a good salesperson. I'm happy to admit, like, let me toot my own horn, toot toot. It also sometimes will put a fire under your feet too. If you say, let's do option number 1, or let's do option number 2, and you're like, yay, we're gonna go home shopping. Okay, I've gotten in the position before with option number 1. And we go pop their house on the market. There's no reason it shouldn't sell. And then it doesn't sell the first weekend. It's overpriced, or we misjudged the market a little bit. It happened one time with a really good friends and close neighbors. And my tolerance for, guys, we got plenty of time. We got plenty of time. Long closing on that new house, plenty of time. My risk tolerance and my comfort level with like, hey, let's give me 10 days. Can I have 10 days to sell the house? I know I would normally sell them in like 36 hours. I get it. Like, I'm sorry. Right. Let's adjust the price a little bit, but like my ability and my confidence and like, I'm going to make this happen in this amount of time did not line up with what their comfort level was. And I had to listen to them where he was getting real antsy. One of them was getting real antsy and was like, Elizabeth, I need to be able to sleep tonight. I need to know that my house is sold. So we need to keep dropping the price. Let's drop the price. Let's drop the price. And I'm like, buddy, if you give me like 3 days, I'm going to get you that 10,000. I don't think we need to reduce it to 10,000. But again, you're like listening to them and your stress level may go a little bit higher if you start playing this game. But I encourage you to practice the conversation, make sure that you're helping them get their house ready so that if you find the new one, it's not like, oh, now we have 3 weeks to get all the jobs that we need to get done on our house done. But just know it does put a little like fire under your feet, right? Whether, and any of the, like really 1 or 3, because 3 puts a lot of fire under your feet too. That if you got their house under contract and then they're going to be homeless, trust me, like when you're like at 37 days until they're homeless, you're like knocking on every door in that zip code. Like, excuse me, I have people that are gonna be homeless and I know that they said that they'd move into an apartment, but now the day is here and like, I don't want them to move into an apartment because they might sign a year lease and then I'm out the sale and kind of a thing. So you like, just know, like be prepared and you can handle it. That's how you run a big business and it all will be fine. But note that there does come a little bit of extra, like know your people and communicate clearly with them. How's it going? We're gonna go look at 2 more houses this weekend. Like, how's the project with the wood rot and how's the project with moving the dirt in the backyard and getting rid of that, swing set that's falling apart that we talked about. Are we doing that? Are we just sitting around watching football? Okay. Okay. Any other questions when it comes to loans? Who's here bought a house and gone through the loan process themselves? Okay. Is it a little bit helpful? Like, it's not as scary as you think.
Yeah, they do. I mean, most of the work, the lenders, I mean, it was who I worked with, which was I think Farm Bureau, that made it incredibly easy. And like my realtor at the time was close to them. And I mean, I just felt very hands off. And when I had a question, they were able to get that to me immediately. And that's like what made me feel secure and all that is when I didn't have a question, it was either like, let me get that answer for you and I'll be back with you in like 10 minutes. And I think that's like kind of what saved that for me. But
Yeah, no, and I think that that's partly why too, it's a selling point is to say, hey, these are 3 people that I have worked with and I trust and I have a good relationship with. And I know they're going to do what they're going to, but it allows you as an agent when you have really strong relationships with a couple of lenders that you have the ability to like, oh, let me get with, so-and-so and get right back with the lender and get right back to you, like, oh, that shouldn't have been like that. Like, it helps make the whole process easier. As an agent that's new, somebody asks you a question that you don't understand. It's the same consultant, like agent question of, what, I am like 90% sure what the answer is to that, but I really don't want to tell you wrong, Craig. So let me give the lender a call real quick and I'll give you a call right back. Nobody's gonna question you. No one's gonna think that you don't know what you're doing or that you're, like, especially if you say I'm 90% sure. I am now, this is how I am 90% sure what the answer to that is, what the answer to that is. And I don't know it. You can leave that like, and I don't know it part out, right? Like you might be 90% sure you have no idea what the answer is, but you're being honest. Like I know, like as a salesperson, you don't want to lie. It feels like you're lying. You have no clue, but you are 90% sure you have no clue what the answer is. I am 90% sure I have no clue to answer your question earlier, right? So like you gotta like feel okay. That's not being a sleazy salesperson. That is you being honest, just like not saying all of the things and keeping their confidence level. And you're gonna go ask a question. Okay, the other thing with the lender, it is your responsibility to get them the sales contract, okay? And when you go under contract, you need to immediately send them the entire sales contract signed by all parties, okay? They cannot lock the rate in until they have a signed contract. So it is a matter of urgency to get it over to them and to the title company, but that's a different story. The other thing I would say when you're sending over your sales contract to your lender, the order of the documents is important. Okay, be a good agent. If you have a counteroffer, if you have an escalatory clause, that goes on top. Counteroffer, sales contract, like escalatory clause, right? Then you do your seller's disclosure and your franchise disclosure, or lead-based paint, all that behind it. The reason I say that, not good agents, which is not you guys, will sometimes put over the sales contract first, and then they're going to do the seller's disclosure. There was lead-based paint, there was a cold waiver, weather addendum, there was a COVID one, then there was and then the counter is sitting down on the bottom. Lenders, as great as they can be, they're processing a gazillion loans. They're bebopping along super fast. They see that sales contract on top, and they think that purchase price that you wrote for the original sales contract of $200,000 is what the value of it is. They put it in their system. Somehow it gets missed along the way, goes out to the appraiser that way. Appraiser thinks he's only supposed to appraise it for $200,000. Okay, appraiser does his job. He says, I think it's worth 205. Woo, I did my job. Yay, way to go. Like, have a great day, right? And all of a sudden that listing agent's calling you, blowing up your phone and saying, it didn't appraise. And you're like, oh shoot, it didn't appraise. And they're like, yeah, appraised for 205. It's supposed to appraise for 215. That's what our contract price is. Well, to go get an appraiser to make an adjustment then is incredibly hard, okay? The other reason, and I've seen it happen to agents, it made it all the way to the closing table at 200,000 and didn't get caught. And then that's a whole hell of a lot of problems, right? Like there's a lot of things you're supposed to do along the way, and we're gonna talk about that. But do you see how order of documents are important?
So can you say what that order was again? Your first is your counter, then.
Counter, sales contract, escalatory clause, right, all there together. So, right, like you can't miss it. And it should be called out on your contract with those little boxes, you know what I'm talking about, where you're gonna check what's a part of the contract. And yet even good lenders get going fast, or they got a new person working for them, or something happens. And it's just a really bad day when you're like, uh-oh, that was my fault. And we'll talk about appraisals and that there's a whole process as a listing agent to try to help control that, a whole appraisal piece. But as a buyer's agent, be a good buyer's agent. And you're also going to want to send over, your lender's going to ask pretty much immediately, who's your title person? Who are you working with for title? Who's the seller's title person, right? So it's always good when you send over that sales contract, or solve yourself a little bit of heartache, and you'll look like a true professional. They're going to be like, is this your first deal? It doesn't look like it's your first deal. Like it looks pretty put together. Be like, yeah, I am. So send over a copy of the contract, and then here's the name, phone number, email address of who we're going to be using for title. Here's the listing agent or the seller's title company kind of a thing as well. And that's, I don't know. Do you guys, any other questions when it comes to lenders? This, yes. Yeah. And I can send you an editable version too. Do you like it still though? Do you think, I mean, I honestly created that all myself.
I like it.
I mean,
Would you create it in Publisher or PowerPoint?
gosh, this is an old one. I would bet that it's either PowerPoint or Publisher. I stopped using Publisher like 8 years ago, maybe
Yeah,
9
I
years
still use
ago.
PowerPoint to create things.
Now I'm a Canva girl.
Oh yeah, well, I'm a camera girl too, but yeah.
I am so funny.
In Tanner, I think that's his name, in his video, does he talk about in any detail VA loans?
I believe so. I will
Okay,
verify.
Okay,
And I will set up a time for Chad and Tanner to hook up with y'all. And otherwise, feel free to set up a date with them. They do coffee well and are happy to help. All right, other thing, as like your loan officer, you're gonna like, oh, okay, these are two good lender questions, because we're talking about the lender relationship. With the appraisal as a buyer's agent, like they will not tell the listing agent what the appraised value is, right? But you're gonna, like, they're gonna contact the seller's agent to schedule the appraisal. You're gonna then start getting phone calls from the seller's agent. Have you heard back about the appraisal? Have you heard back about the appraisal? Like, you should be in communication with the listing agent on, like, it's okay for you to reach out to the listing agent and say, have you heard from the appraiser yet? Have you heard from the appraiser yet? Oh, cool, the appraiser's going out next Tuesday? Great, put that on your calendar. And then it's okay for you to start following up with the listing agent, or I'm sorry, then the listing agent will start following up with you. Have you heard back on the appraisal yet? Have you heard back on the appraisal yet? That's a normal conversation. But the listing agent can't call the lender and say, what was the appraised value amount? Like, they typically are gonna count on you to follow up with the lender to see if that appraisal's back in. When the appraisal comes back through the lender, a lot of times it's gotta come in through like a review department first. So an appraisal, or the lender might say, I see the appraisal was sent out and was assigned on this date, when you're trying to find out, like, why haven't they gotten a phone call to the listing agent? And then the lender can say, okay, I see the appraisal, it was due back. So the lender can tell you when the appraisal is due back from the appraiser. Does that make sense? So if you're not, that process is not moving along, then you can call and say, hey, do you see, when is it due by? Oh, it's due by next Thursday. Well, shoot, she should be getting a phone call then, kind of a thing. And then they can see when it comes in, and sometimes they're gonna say, I can see we've got it in hand, but I don't see it yet. It's gotta go through that department first. And then once it goes through the department, technically, they're supposed to tell your client what the value is. And then your client's supposed to tell you, but like a lot of times, like they're gonna just be like, yeah, we're all good on value, no conditions, kind of a thing. And we'll talk about the details of appraisal later.
so is it okay then as the buyer's agent to tell the listing agent what it appraised for?
No,
they'll
I would never do that. No, I just recently sold off my interest in my lake house. And I was like, anybody want to tell me what I appraised for? Because I know I give them a good deal on it. But no, don't, because the reason being is that listing agent is gonna go tell the seller, and like, if we wrote it for 300,000 and we got it for 300,000, but then it appraised for 315, as a seller, you're gonna be a little pissed, like, I have $15,000 on the table.
Yeah.
So no, the only time you find out what the value is of an appraisal is if it, as a listing agent or as a seller, is if it doesn't appraise. So I always told my clients, we don't want to know. I want the phone call that it supported the value of the contract and there was no requirements. We don't want to know. So, and the lender should, it's your job to stay on top of it when it comes to the flow of things. A lot of times I would communicate to my lender, don't order the appraisal until we get through inspections. If it's a house, I wasn't really sure was going to make it through inspections. And you guys are going to sell some crappy houses. I'm just going to be honest with you. And you're going to be like, I don't know why the hell they wanted to write an offer on this one. It looks horrible. You can tell like it's not been maintained well. Go pick up the phone and be like, yo, lender, I purposely wrote this one for 45 days because I wanted to have breathing room in this inspection. So do not order that appraisal until I give you the go ahead. Okay, couple reasons, and this is you as an agent being a good agent. Your job is to protect your people. A couple of reasons why that's important is that you want to not have them spend money on an appraisal if the contract's going to fall apart in inspections. B, it would drive me nuts because I am a like bulldog. Like if I knew I had to negotiate stuff in inspections, but the listing agent already got a phone call from an appraiser, and I was trying to negotiate down and we're down to where like, okay, I'm trying to get them to give us $1,200 more, right? Like I need $1,200 more than I'm gonna try to negotiate to help take care of my people. Well, the listing agent already got a call from an appraiser. She already knows my people are already $500 more in the hole for that appraisal. Are they really gonna walk over $1,200 and lose that 500? And it like hurt my negotiations, or it made it look like, oh, they're moving forward whether we do the $1,200 worth of extra stuff or not. So does that make sense that there's some times where it's not a big deal? And then there's and you need to make it go faster because you've got a 30-day close and appraisers take a long time because it's busy season. But there's sometimes that you've got to be the one that's thinking, right? Your clients are counting on you thinking through this house, what this transaction looks like because of the product that you're selling, which is a crappy house. And you've got to slow that timeline down and say, okay, let's do 45 days. Let's not order the appraisal yet. Okay. The other thing is between appraisal and closing, insurance happens and the lender is going to ask you, I mean, you help facilitate that between the lender and sometimes the lender has lender partners, but that's something that you can be involved in and the lender is going to want. You also want to be bugging that loan officer for clear to close, but a sample of what the final settlement statement is. So you can review that settlement statement. So you can make sure that the $395 flat fee that you're charging to your clients is on there. B, so you can make sure sales price is correct, any seller paid closing cost is correct. If there's a amount getting paid to the roofing company for the new roof that was put on, you can verify all of those things. And you should be looking at that. Sometimes, guys, it will be hot and heavy coming in right before closing. Like I'm talking like day before, 2 days before. If that continually happens with the same lender, you might want to look at getting another partner. Okay, there are situations where it happens because the appraisal came in late because it was a quick close and it's beyond their control. But you want to be able to verify that and it's okay for you to harass them for that. When am I going to have that? I need that. Like, I want to see it. Like, can I review that? I want to make sure that I'm on the same page. You should have always reviewed that before you go to a closing table. You do not want to be reviewing that when you're at the closing table with your clients. And I would say that like sometimes your lender will attend closing too, sometimes they don't. But those are things that I would recommend and that you are as a fiduciary for your client are in charge of doing. Also, they're gonna more than likely need to bring a cashier's check or have their funds wired for their down payment. So setting that expectation with your clients too ahead of time is good. And
That
that's
would
what you're
include
doing.
all closing costs, right?
Closing time, like cash to close.
Yeah.
And that's what it'll say at the bottom of the document is cash to close. On your contracts, guys, last thing is loan approval. There is a term in the contract that requires that a buyer have their loan approval. Oh, Randy, please don't kill me. These are things that, see, I'm used to like being a team leader and holding different appointments and not all of the details. And I'm a little like, so the loan approval is either, I believe, within 30 days or 5 days of closing, whichever is quicker. Does anyone know what it is? Candace?
Oh, wait, it's on the contract, that's what it says, 30 or 5.
It's on the contract. So when you're writing an offer, there's a loan approval, right?
I've read it.
section. And that's what that means, okay? I sold houses for like 4 years and nobody told me. And I got real lucky because I didn't get caught with it not being, okay. So what you're saying is you got to write in that term to change it, but that your client is going to have loan approval either within, let's call it 30 days, read the contract, read the contract, read the contract. Within 30 days or 5 days prior to closing. Why it's 5 days prior to closing is if you wrote a 30-day close, then you need to have that loan approval by 25 days. What can happen if you do not is that the contract can get canceled on your clients, their breach of contract, like trouble, okay? Most listing agents don't pay attention to it and don't really don't care and maybe don't say anything about it. And yet it's a loophole and it's something that can get you in trouble if somebody else is wanting to try to steal the house and or it is a contractual term. So pay attention to that.
Loan approval and clear to close, is that the same thing?
Yes.
Okay. And then we have a class to go over writing the contracts.
Yes.
So can we
Yes.
go through that?
Yes.
Yeah, okay.
Yes. But yeah, clear to close is a beautiful word. And there's going to be times where they're going to say, okay, I just need to send them through underwriting like one more time. I need the 2 more documents and it should be fine. He's got me the 2 documents. Everything looks good. But like clear to close means they've sent the documents. They've approved the loan and then the documents goes to the lender's closing department where they type up all of the forms, all the does that make sense? They fill in all the blanks. And then they send the documents from that closing department to the title company. So you get clear to close, and if you're on a tight timeline, okay, we got clear to close, like when will you guys be sending docs to the title company? Kind of a thing. Cool. You can also never close a loan on a Saturday or a Sunday. I've heard of it happening like one time and it was a complete and total disaster. And that's in like 12 years across like a gazillion transactions of all friends, family, anybody in the real estate world. So don't ever think you can close. And if any lender tells you they can close something on a Saturday, like tell them fly kite. We're not partners. We're not gonna be partners. You're not on my roster. I'm so sorry. Sounds like you're trying to sell me, like. Anyhow. All right, thank you guys. Enjoy your Friday.
Thank you. Me too.
I appreciate you.
We appreciate you.
Does anyone have appointments this weekend? Where are you going?
one, now I'm showing us a little bit. My parents,
Nice, Wellsville.
yeah.
That'll be a good one. Oh my God.
hopefully,
How do you feel about that?
scared.
Yeah, I wouldn't, okay. Do you want my real